All right, welcome everybody. Oh, for some reason my screen is black. Let me get that started here real quick. It was working fine just a second ago. Let's reactivate it. All right, there we go. My cord came out a little bit. Sorry about that, folks. Welcome everybody. Welcome to today's live stream here on both Facebook and also on YouTube. Welcome to everybody tuning in, especially if this is your first time. All right, so once again, this is our Thursday live stream that we talk about the VectorVest stock advisory, and we talk about what's going on in the market, talk about a general topic of discussion to help you become better and more successful investors, and then also help at the end of the session show you how exactly to analyze any stock that you're interested in less than 10 seconds. So if you guys can hear me either on both the Facebook or the YouTube side, just let me know in the comments. That way we have confirmation everything's working, and we'll go ahead jump right into it here. For anybody just tuning in for the first time, feel free to ask questions. Feel free to chat with one another in the comments down below. If you want to get your stocks analyzed, just make sure to wait towards the very end. We'll analyze any of those stocks for you and show you exactly how you can do so extremely fast, faster than anywhere else out there. So give me 1 second here. Let me make sure we're streaming. You guys can hear me. Can you guys see the screen here? Just want to make sure everything is working on the Facebook side. It looks like YouTube is definitely working. It looks like Facebook is having some issues again. Let's go ahead and refresh this real fast. Let me make sure everything's coming through. All right, there we go. Now I'm seeing it. Perfect. So welcome everybody. Welcome. There we go. Now I'm starting to see everybody tuning in on the Facebook side as well. Joe, Susie, Tommy, Jay. Hopefully you guys are doing well. Working on YouTube as well. Perfect. Thank you guys. All right. So what we're going to be talking about here today, for anybody who didn't see the intro screen, we're going to be showing you how to know exactly when you should be getting in and when you should be a little leery about jumping on board just because you see the markets going up. There's been a lot of talks recently, or there's been a lot of craziness in the markets the last few days, where we've seen a lot of sell-offs from last week coming into the beginning of this week. And then all of a sudden, the beginning of this week, or now the last couple of days, we've seen the market taking off. And a lot of people have been itching to jump on board. They don't want to miss out on the next rally, obviously. So we're going to help simplify that and show you a systematic approach to be able to get a clear answer on whether or not you should be getting in right now, or maybe there's a better opportunity out there, or by being patient and waiting a little bit longer. So with that, let's go ahead, take a look at what's going on here today. So right now the market is 3 ticks into the yellow, therefore the color guard is neutral, and VectorVest advocates caution when buying stocks at this time. As always, as a VectorVest subscriber, you get the daily market update every single night, which goes over what happened in the market today, what to expect for tomorrow, what news you need to be aware of, and how to prepare yourself for the next trading day. If you scroll down a little bit, we then get to the color guard, and the color guard analyzes 3 key components of our overall market timing system. So the first one we take a look at is the price. The price of the VectorVest composite is an arithmetic indexed average of about 8,800 stocks that we currently track in the US market. Now, this will differ depending on what market you're in. Obviously, different stocks in different markets. Right now, we're looking at the US. And so this gives us a better representation on what's actually happening in the market, because it's not just looking at the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at 8,800 stocks all into one. The second indicator is the RT, or relative timing. This is looking at the short-term price trend of the overall market, and it's cast on a scale of 0 to 2. So above 1 would mean the short-term trend of the market is up. Below 1 would mean the short-term trend of the market is down. So at 0.94, we can see the short-term trend of the market is down. Not sure, that's a connection issue, unfortunately there, Siddharth. I can't control that aspect of it. All right, after the RT, the next indicator is the BSR, or buy to sell ratio. The buy to sell ratio is looking at the number of buy rated stocks in a database to the number of sell rated stocks in a database. Every single day we give a buy, hold, and sell rating on each stock that we track. And we use a systematic approach to give that buy, hold, or sell rating rather than just somebody's personal opinion. So we look at this, and when there's more buys and sells in a database, the buy to sell ratio is going to be above 1, and that would indicate strength in the market. Below 1, as it is now at 0.5, tells us that there's overall market weakness. No surprise there. Mark's coming in 8869. Nice. 8,869 stocks are currently in the VectorVest composite right now. Thank you for that, Mark. All right, so we see that we do see the market has a short-term downtrend. We see some weakness currently. Even though the market's been rising, we don't have any green lights showing in the price column. It's still showing neutral or yellow, telling us, just like a traffic light, to be cautious. These 3 indicators are comprised to come up with our MTI, or our market timing indicator. This is looking at the underlying trend of the market. And once again, it's going to be cast on a scale of 0 to 2 to keep it simple for everybody out there. So above 1 would tell us the underlying trend of the market is up. Below 1, underlying trend of the market is down. At 0.91, we can clearly see the underlying trend of the market is down. And we're going to be talking more about this in a little bit. After the MTI, we then get the trend column, which shows 2 parts of the trend each and every day. The first part is looking at the primary wave, which is simply showing the short-term or weekly trend of the market. As we can see, it is up since the price of the VectorVest composite is higher than it was 5 trading days earlier. The second part is looking at the underlying trend, or simply the MTI. So since the MTI is below 1, the underlying trend of the market is down now. And then finally, last but not least, we get the calls column, which stands for our confirmed calls. And our confirmed calls are our most conservative timing system here at VectorVest. They're our last signal we get to get into the market, and our last signal we get to get out. So as you can see, we still remain in a confirmed down situation. If we scroll down just a little bit, as always, we like to take a look at the advanced declines here, because the advanced declines, is a great tool to use on a daily basis. So if you're looking for a good day to buy, you want to see at least twice as many stocks advancing than declining. And if you're looking for a good day to short or buy a contra ETF, just the opposite. You want to see twice as many stocks declining than advancing. So right now we have about 29% of stocks moving higher and about 59% of stocks moving lower. Therefore, we do have a bearish bias on a daily basis here so far. All right, and then with that, let's go ahead, since we're on here, let's jump into today's topic. And as always, if you guys enjoyed today's session, don't forget, hit that like button, share this with all your friends, share this with all your family. Let's continue to grow this phenomenal group that we've been growing really for about, I think, the last 3, maybe 4 years now. So what we're looking for is good opportunities to jump into the market. If we go ahead and just pull up the VectorVest composite graph real quick. There we go. We'll go 6 months, for example. So not every time or not every day is a good day to buy. That is something we firmly believe here at VectorVest, and we want to make sure that our subscribers are aware of this. This is why we utilize the market timing that we just looked at on the homepage, and we'll dive into more of that in a little bit. But when looking at the market timing graph, yes, over the last year, it's done nothing but go higher. But if you, for example, bought the last couple of days just because we had a little bit of an update, if we don't hit a new high, you're buying in right at the peak. And that's what a lot of emotional investors tend to do, is they buy the peaks and then they sell at the bottoms. Well, utilizing the VectorVest market timing, it can help improve your entries by not getting in at the peaks and making sure that you're waiting for a true oversold scenario that can really help maximize your gains. Let's see. I guess we need another 5 days before it could turn green on the color guard. I'd have to go back and look at it, but not necessarily. It can't go from green to red over a 5-day basis on the price column, but I'd have to go back and take a look at the historicals to answer that exactly. Yeah, unfortunately there. So VectorVest has been around for over 30 years now, and one of the things that's kept us in business and kept us around is our market timing. We've never failed to signal a major market top or a bottom, and we'll get you in within about a week or two of those official tops and bottoms. So as we can see, we did get that confirmed down. We've been warning people, and right now, if we zoom in, let's say to a 1 month, there we go. Let's go. Why is it set back that far? Am I having internet issues again? Maybe not. Let's go ahead and just zoom in. All right, so as we've been talking about, I believe it was last week, we were looking at the price of overall market. We've been talking about the lower highs we've been experiencing really for the last couple of weeks now. Well, the last couple of days, yeah, we've seen the markets up big. We saw a big push off of that bottom. But at the same time, we're still at a lower high and we still have lower lows also in place. From a very simplistic, basic definition, an uptrend is higher highs, higher lows. A downtrend, lower highs, lower lows. Well, we clearly see the lower highs and lower lows right now. So therefore, that's why we see when we go back to the home page, getting internet issues again. Give me 1 second here. There we go. Give me a time to take a quick break or a quick drink. So getting back into the homepage, that's why we can see we have 3 ticks into the yellow currently. Because even though we've had 2 big up days the last couple of days, that's not enough to convince us that the markets are back to being rosy and everything's okay and the markets are going to continue to go higher. So we take a look here at the color guard, getting in more detail as we look at what's going on in the market. We can see a lot of red the last few days, but then starting to turn to yellow. Once again, think of the color guard like a traffic light. Green would be telling you to buy. Yellow tells you to use caution. Sometimes you go through a yellow light, sometimes you don't. And then you have the red, which simply means stop, hold off from buying, just be patient. And so that's where we're seeing it. A transition from red to yellow, telling us we could be taking a break from that red, or we could start to see the beginning of a new uptrend, but we don't have enough data yet to really say that, yeah, we're in a new uptrend. And that's the thing about VectorVest, is we're trend followers. We never try to predict the overall trend of the market. We never try to forecast what's going to happen 2 months down the road, 3 months down the road, 6 months down the road, a year from now. We just simply let the trend be our friend, because we found the most success in trading in the market has been from following the trends. So speaking of trends, there's a few key trends that we've noticed over the 30 plus years that we've been around. When we look at our color guard, the buy to sell ratio and the MTI are two important indicators to always focus on. There's a saying here, keep your eye on the MTI, because the MTI can tell us not only, what the trend currently is on the underlying trend of the market, whether it's up or whether it's down, but it also can identify when we start to see, bottoms in markets, or the market's getting oversold, and also tops in markets as well. So starting off with the MTI, there's two key levels we always note. On the bottom end, it's 0.6 to 0.7 in that range, generally shows the market starting to look for a bottom. On the top end, it comes out to 1.5 to 1.6, generally shows the market starting to look for a top. Now, just like with any technical indicator that shows overbought and oversold scenarios, just because you hit those levels does not mean that the market's going to reverse and turn back around instantly. But it does give you signs of telling you when you should maybe start tightening up your profits, or tightening up your stops to lock in more of your profit, or when you should start getting a shopping list together, so that way when you do see the official reversal, you're able to take advantage of it right away rather than missing out on some good opportunities there. Exactly. Quote of the day there, Jay. All right. So right now we've been looking at it. The lowest we got was 0.77, and that was on July 19th. And it hasn't gotten really to that oversold scenario. So when thinking about the market timing graph that we were just looking at, when you have the market blasting off the last couple of days, be careful. Don't let your emotions get involved. Focus on the data and wait for confirmation. Right now, we don't have confirmation that the market was really in an oversold state enough to make it worthwhile to jump on board or take that risk to get back into stocks currently, especially after such a long run that we've been seeing. And with all the articles and news coming out about, people predicting a 10 to 20% correction anytime now. VectorVest will help remove that emotional aspect, help remove that fear of, is the market going to tank, or remove the fear of missing out on that new uptrend. We can take breathers. Nothing goes straight down, nothing goes straight up. And the VectorVest indicators help you take a step back and focus on the bigger picture of what's really going on. So based off of this analysis, since we see the lowest we've got on the MTI was 0.77, that tells us we haven't really gotten to that oversold state that would show a healthy correction in the market that would make it worthwhile to jump on board. So even though you see the last couple of days the market going higher, this tells us sit on our hands, be patient, manage the stocks you're currently in, but do not try to jump on board into new stocks at this time. There's a lot more risk associated with that, and that also tells us that downside risk still outweighs upside potential at this point. So hopefully, that first and foremost. A lot of people who have been with VectorVest for a while, any Jockey Club members in here already probably know this. But for new members or new people getting started for the first time into the markets, or getting started with VectorVest for the first time, this is extremely important. I've been here for about 10 plus years now here at VectorVest, and I can't count how many times I've seen, because it's just so high, people that are just getting started into VectorVest ignoring what they see here and just seeing, oh, I found this stock in the program, so I'm going to go ahead and buy it, and ignoring the fact of what the market is doing. Market timing is the most important factor you need to be aware of when making decisions for yourselves in the market. So that's the MTI. Getting back to the second aspect, the buy to sell ratio shows strength or shows weakness to the overall market. So it's a good indicator to look at on the health of the market, but also it can tell us when we hit oversold conditions as well. So whenever the buy to sell ratio gets below that 0.2 threshold, that generally shows that the market is grossly oversold and that a reversal could be imminent. Not that a reversal is going to happen the next day, but that in the very near future, we could see that reversal coming or taking hold. So when getting into it, we hit 0.21 on the 19th of July once again. And we got close to that oversold territory, but not quite all the way there yet. So this just gives us more confirmation really that, whether you're trying to get in the market right now or whether you are looking to get in for the first time, be patient, wait for that better buying opportunity. The downturn, while it's taking a pause for the last couple of days, may not be over. And you do typically see pauses through, downturns and upturns. Awesome. Glad to hear it, Maria. There you go. Love hearing that. So looking at the buy to sell ratio, that tells us that once again, we're not really done with a potential correction or this downturn that we've seen. Now, there may be some news that changes over the next few days and, let's say the Fed comes out and says inflation is at less than 2%. Everything's back to normal. The job market starts improving. Everything, the issues with supply chains just disappear, and all of a sudden everything goes crazy. But for now, focus on the data and focus on the historical numbers here, because those have proven right more times than they've been proven wrong. And the probabilities are on your side by following this type of analysis. Once again, we've been in business for over 30 years, closer to 35 years, and there's a reason for that. Because this analysis has been consistent all throughout the last 35 plus years. All right, so also with the buy to sell ratio, not only does it show those oversold levels, but it can also show the overbought levels too. So 0.2 is the threshold that tends to show the market's oversold on the lower end, but on the upper end, you typically see 2.0 to 3.0 is where you start to get into those overbought territories with the buy to sell ratio. Showing that there's a little bit too many stocks that are a buy right now compared to the sells, and that you should be cautious. Not stating that you should just close out the second you get to those levels, but just telling you to pay closer attention to what's going on in the market and be mindful that we are in an overbought state. Just like the buy to sell ratio, the MTI also shows overbought territory as well. When the MTI, as we've talked about just a second ago, gets to 1.5 to 1.6, that historically shows that the market is looking for a top and to be very, very careful. Now, you could have situations like we've seen over the last, 6 months, 7 months so far, where we've hit those overbought levels and the market just slowly grinds higher. And that creates those bearish divergences like we've been talking about over the last few weeks. That's how you get to those situations. When those situations occur, it's best not to ignore those bearish divergences there. Because when you have those kind of situations, the longer it continues to diverge, the bigger the reversal typically is. And we've seen a huge reversal over the last few months. So once again, follow the analysis, be careful, and don't get suckered into buying just because you see the markets up and all the people on TV talk about how, the markets are great, time to start buying in. And time to start buying in, and everything's back to normal. Because sometimes it's not. And a lot of those talking heads on TV always like to mention that, every day is a good day to buy. And as we stated earlier, VectorVest firmly believes that not every day is a good day to buy. Clear as that. All right, so any questions that you guys have so far on, what to look for, what type of analysis that you should be looking for here, or any confusion that you have on utilizing these indicators, let me know in the comments or the chat. I'd be glad to answer those. So those are some of the early signs that you would typically notice. Now, I'm going to give you guys some pro tips for the day here. So if you want to go back and watch it again to get those, if you're writing them down, feel free. But here's the pro tips from utilizing VectorVest. The first green light after a confirmed down signal is the earliest sign that the market is starting to reverse its trend and telling you that you can start trickling back in from a very aggressive standpoint. So as we can see, just red lights yellow lights, nothing in here telling us, no green lights after that confirmed down yet. So therefore we're being patient. It's so consistent that we've actually developed a timing system in our desktop app called the green light buyer. Green light buyer is looking at the price column, looking for the green lights in the price column there. And every time you get a green light, that's a good time to maybe add a position or two until you meet your max allotment of how many stocks you want to hold. So right now we've had that confirmed down, but we haven't gotten any green lights. So therefore we're still being patient. Second thing you could possibly do, looking at the primary wave, as we were talking about just a second ago. We've been up the last couple of days. And anybody in our jockey club knows the primary wave is a very aggressive and quick signal. It's looking at the weekly trend of the market. And so if you're a short-term trader, looking at the primary wave can be extremely useful. You can utilize this to capture these quick runs higher and lower, but you're going to be doing a lot more trading. Or if you're somebody who's longer term oriented, then look at the calls column. The confirmed calls are consistent. They've been proven consistent time and time again. And if you're a longer term investor and you want to wait for more consistency so that way there's less risk out there for you, wait for that to turn back to up. Right now it's down. So right now you're just simply being patient, sitting on your hands, maybe going out and enjoying, a round or two, hitting a bucket of balls, whatever it may be. But for now, that's the best thing you could possibly do. Get outside, be active, and just simply wait for that opportunity to come to you. Don't try to go out there and chase it there. Andrew's coming in and saying the electric car market, invest in the companies or the companies making a battery or a better battery for use in them. So we've been talking about, clean energy stocks, electric car manufacturers, if you want to put it that way. We talked about it a couple weeks ago. We've seen some early signs that they may be starting to take off there, Andrew, but not quite yet. We haven't really gotten the full confirmation. And when looking at the market timing, kind of wrapping it all together, even the best stocks can go down in the down market. All boats rise with the tide, all boats fall with the tide. General concept, hopefully that helps you guys out. And when you look at it here, right now, no matter how good the stock looks, simply hold off from buying it, because if the market continues to go lower, you could expect some of those stocks that were looking like they were getting ready to take off start to go lower as well. And then you're going to be kicking yourself asking, why did I jump in those last couple of days? I knew the market wasn't at a bottom. I could have bought a little bit lower, but had a better average, etc. So simply be patient. If you like what you're seeing with those stocks, wait for that opportunity to jump on board based off the market timing here. When is a good time to flee the market? So we've been talking about that, Walter. The last few weeks we've noticed a lot of divergences in the market. Markets have been selling off. We've been just talking about just a second ago, looking at the VectorVest composite, seeing those lower highs, the lower lows. And this is a good time to either hedge your bets or, simply take your profit and wait for that opportunity to get back in. But to flee the market from a sense of, closing your long-term holdings, all that really comes down to, the overall market climate that we cover every Friday. Not going to get into it too much here, but the market climate looks at the earnings of the S&P 500. It looks at inflation. It looks at all the macro indicators out there. And we simply simplify it for you by putting it on a scale of 0 to 2. So above 1 means, right now we're in a bull market. When that drops below 1, that tells us that we're starting to enter that bear market. And that's where, if you want to call it flee the market, that would be the time to do so. DEW down and primary wave down. Those are more short-term technical trade indicators there, Walter. Susie's saying, shouldn't you buy on red as good base entrance? No. If you're buying on red, that means you're buying as the market's falling. That means most likely your stocks are falling as well. And if you want to start off that way, you could. Personally, when I get into a stock, I like to have a little bit of cushion baked in right away. I like to see it moving up as I'm buying into it, get a little bit of profit. So that way, if it does have any sort of a pullback or a temporary pause, I'm already in the green. I'm less likely to have my emotions get involved with that one. Profit off Facebook, Apple. Yeah, true. Very true, Maria. All right, so that really covers it. If you're looking for the longer term macro levels, just make sure to stay tuned for the daily color guard reports on Fridays where we go into that. But if you're a short term trader, yeah, you could either use primary wave, DEW. Personally, I like the DEW more because I'm more of a technical trader to begin with. But either one of those can be good depending on what your investment style is, what your risk sentiment is, all of that. Can you show the trend of advances, declines, and unchanged charge daily, weekly? Not in the mobile app, VJ. You'd have to do it on the desktop app. So, yeah. Unfortunately, not on the mobile app currently. All right, so hopefully that answers your guys' questions. With that, let's go ahead and start to transition into the fan favorite here. If you guys have stocks that you want to see analyzed, start putting them in the comments, start putting them in the chat there. I'll show you guys how exactly VectorVest can simplify your investing by giving you usable information rather than just scads of data, and show you how fast it actually takes, or how you can analyze any stock out there in less than 10 seconds. So we just simply go to the magnifying glass in the upper right, and we get our first one, LAKE. Let's go ahead and do that. Also, while we're pulling this up, if you haven't already hit that like button, if you haven't already shared this with all your friends, family, if you're brand new just tuning in, make sure to do that. All of that helps me out and helps continue to grow this awesome community, because really that's what we're all about here. Our mission is to help everyone, or help retail investors become financially independent through the utilization of the stock market. And that's what we want to do. So more people, the better. Don't forget to invite all your friends and family every day or every week. All right, so looking at Lake, as always, we start off with these 4 basic indicators. All 4 of these are going to be cast on a scale of 0 to 2 to make it easy for yourself. All you have to remember is above 1 is good, below 1 is bad. First one we look at is RV, which is looking at the long-term potential of the stock over the next 1 to 3 years. So at 1.54, that tells us the stock has good long-term potential over the next 1 to 3 years. The second is the RS, or relative safety. And the relative safety is looking at the consistency and predictability of their financial performance. But to make it easy for you, it's just simply looking at the amount of risk involved with the stock. So above 1 would show less risk involved, below 1, more risk involved. So this stock has good long-term potential, but does come with a little bit more risk associated with it. Then we get to the RT, or the relative timing. Just like we were looking at on the homepage, the RT is looking at the short-term price trend of this specific stock. So at 0.84, that tells us the short-term trend of the stock is down, or if you're already holding it, another way of considering it is that it's losing us money currently. So overall, this is a good stock, but it isn't in an uptrend, therefore it's losing us money, so therefore we should be staying away from it for the time being. Let's go ahead, take a look at the next one. Where was it? Let me get up here. CLGN. Suggest how do you use VectorVest for day trading? Devin, I'd recommend getting in the Jockey Club. I do a lot of day trading there in the Jockey Club when I host. And if you're interested in day trading, you're not going to be able to do it from a phone because you need more power. You need other tools, and you need more up-to-date real-time data. So if you've never heard of the Jockey Club, I'm sure there's probably some people in the chat that'd be glad to explain their thoughts on it that are in it every single day. CLGN, I'm not finding that, so we'll go ahead, take a look at the next one. MURK. MURK. Not finding that one either. CNDT. And also, don't forget, folks, I am looking at the U.S. markets. So if you're giving me ticker symbols that are outside of the U.S. markets, they may not be showing up here because I'm not in that specific market. All right, so CNDT right now has great long-term potential, but does have a little bit more risk associated with it. It's in a downtrend, so that makes it unfavorable. It is a good stock, just not the right time to be into it. Let's go get one from over here. Of course, I couldn't have a session here, Jay, without looking at Xro for you. So there we go. So Xro, poor long-term potential, a lot of risk. It is a speculative play. I like the stock, but VectorVest analysis is not favorable for it. That's fine. Whenever you see something like this, you have to ask yourself, are the reasons you purchased this stock still true today? For me, it was yes. So therefore, I continue to hold. Everybody's different. Some people may not want to sit through something like that. But yeah, it is in a steady downtrend right now. Overall, not favorable currently. Let's go here. Let's see the next one. ZUO. ZUO, poor long-term potential. A lot of risk associated with it, but it does have a steady uptrend currently. Unfortunately, the uptrend is not strong enough to offset that risk, so therefore the stock is unfavorable for the time being. Let's see, SINO. SINO, good long-term potential, but does have a lot of risk. It's in a steady decline right now, so therefore the stock is not favorable. SENS. I think that's what you're talking about, Susie, SENS. Sonic Holdings, poor long-term potential, a lot of risk associated with it. So it's a speculative stock. It's a biotech stock. No surprise there. But you do have a short-term uptrend. Overall, not enough to make the stock favorable, but it is a speculative play. With a speculative play, you have to have a really strong RT showing a lot of momentum currently behind it to really make it a favorable play. All right, JKS. JKS, poor long-term potential. It does have decent fundamentals though, so less risk associated with it. You have a really strong short-term uptrend. Overall, the stock is favorable. Let's see, going over here, ORCL. ORCL, great long-term potential, solid fundamentals, so less risk associated with it. You have a strong short-term uptrend. Overall, the stock's definitely favorable here. Also, while we're going through these, just to give everyone a sneak peek, I don't think Glenn's mentioned anything about this, but if you guys are on the Facebook side and you're not already following us on our YouTube side, make sure to do that. Glenn and I have been working on a project here that we should be able to talk more about here in the very near future, within the next week or two, hopefully, if everything goes through according to plan. That we're extremely excited about, and I think you guys will be too once you see what exactly we're going to be doing. So if you guys haven't already started following our Facebook page, or our YouTube page, make sure to do that. Also, if anybody's on Twitter, go ahead and feel free to follow me. PRFrance88 is my handle. And we'll be keeping some live updates throughout social medias as well. So if you guys want to follow along with that and see the sneak peeks of what we have that we hopefully will be announcing very, very soon, make sure to head over to our YouTube page, like the page, turn on notifications, and then also follow us on our socials there. All right, so we've done that. Let's go ahead back over here. Apple, AAPL. So Apple has great long-term potential. You have less risk associated with it. No surprise there. You have a steady uptrend. Overall, stock still favorable. Dell, DELL. Dell, great long-term potential. Less risk associated with it. But you are in a slight decline currently. It's a good stock, just not the time to be long in it right now. SAVA. SAVA. Poor long-term potential. A lot of risk associated with it. However, this stock is moving parabolic. So if you're a trader right now, day trader right now, this is definitely going to be an interesting play for you. Overall, it's favorable because of that momentum. But if you look at anything fundamentally whatsoever, this is not going to be a stock for you. This is going to be for a speculative trader, to say the least. All right. Let's see. MITK. MITK, there we go. MITK, good long-term potential, less risk associated with this stock. You have a nice steady uptrend, so yeah, of course, this stock's definitely going to be favorable currently. Let's go over here, scroll it down a little bit. BAC, Bank of America, one of my favorite banking stocks to trade. So looking at Bank of America, you have decent long-term potential. You have solid fundamentals. But however, the timing is not the right time to be long on it. It is in a steady decline. Overall, the stock is good, but just not the time to be long in it. TNXP. Let's go ahead and get that pulled up. So poor long-term potential, a lot of risk associated with it. It is in a steady decline currently. Overall, the stock is not favorable. Crocs. All right. CROX. I believe Steve Chabel is actually walking around some Crocs today, Jay. So Crocs, you have good long-term potential. You have less risk associated with it because you have solid fundamentals. You have a really nice, strong short-term uptrend. So yeah, overall, the stock's definitely favorable. NVDA. NVDA has great long-term potential. You have less risk associated with it because you have solid fundamentals, consistent earnings reports quarter over quarter, year over year. You have a really strong short-term uptrend. Overall, stock is definitely favorable here. EVC. EVC has good long-term potential, about average risk associated with it. You have a really nice, strong short-term uptrend. So yeah, overall, stock's definitely favorable here. ASML. ASML, good long-term potential, solid fundamentals, so less risk associated with it. Nice, strong short-term uptrend. Overall, stock's definitely a winner here. Let's see. Block, BLOCK. Not finding block. Lyle, are you looking for H&R block or block what? Let's go over here. SPXL. So, all right, going to look at some ETFs now. With ETFs, VectorVest makes it extremely easy to answer that question of whether or not you should be into it or whether you should just be letting it pass. So with ETFs, your RV and RS are always going to be pegged at 1 because there's no financials that get reported on a daily basis or quarterly basis like a stock does. So therefore, your focus on an ETF is going to be RT. If it's above 1, it shows the short-term trend is up and therefore you should be in it. If it's below 1, the short-term trend is down, you shouldn't be in it. So at 1.44, the short-term trend is still up, therefore it's still a buy right now. ENPH. Enphase, let's go pull that up. Enphase has good long-term potential, less risk associated with it. You're in a strong short-term uptrend. Overall, stock's definitely favorable here. BLICK. Okay, there we go. Not finding that one either. Give me the name of the company. I can look it up by that way if we need to. CLF. Cleveland Cliff. Great long-term potential. Does have a little bit more risk associated with it. No surprise, a lot of these resource stocks do. You're in a steady decline right now, so therefore the stock is a good stock, but just not the time to be long into it right now. RGP. Let's go ahead and pull that. Oh, there we go. There's a lot of them. Mark, mug doesn't work on this one. Sorry, guys. Let's go see NVDA. Oh, wait, we've already looked at that one. BNTX. BNTX. So BNTX, you have great long-term potential. Better than average fundamentals, so a little less risk associated with it compared to the average stock out there. You have a really nice, strong short-term uptrend. Overall, stock's definitely favorable. EARS, let's go ahead and pull that up. Poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, not favorable currently. mRNA. mRNA, great long-term potential. Less risk associated with it. You're in a strong uptrend right now. Overall, definitely favorable here. AT&T. I believe the symbol is just T. Yeah, AT&T. Average long-term potential. You do have a lot of risk, so inconsistent fundamentals you got to be worried about there. It's in a steady decline, so therefore not favorable currently. Lodge, LOGI. Jay, come on now. Trying to get the paycheck course. Not in here today. This is not one of those streams there, Jay. All right. Wait. LOGI. There we go. Logitech. Great long-term potential. Less risk associated with it. You're in a slight uptrend, basically flat on a short-term basis. Good stock. Just be careful of the timing right now. Let me get a few more in over here on the Facebook side for the day. CCXI. Poor long-term potential, a lot of risk associated with it. You're in a steady free fall right now. So overall, stock's definitely not favorable here. ASO, great long-term potential, but does have a little bit of risk getting to that long-term potential. You're in a steady uptrend still. I'd be a little careful though if you look at the RT. RT has been slowly decreasing over, what is that, the last month and a half, 2 months almost. So you are seeing momentum waning. Overall, still in a short-term uptrend, but be careful with that momentum waning right now. All right, let's see. Thank you, Maria. Let's see. HTD. And we'll do 2 more here real fast. We'll do 2 more for the day. So this appears to be an ETF. I know it because RV and RS are pegged exactly at 1. Very rare to see an actual stock have that happen. But, you know, looking at the timing when looking at an ETF, 1.08. Below that level, we typically like to see of 1.1 or greater. So therefore, I'm going to say pass for right now. I need to see that RT pick back up. At this stage, it's basically flat, more of a loss of opportunity rather than necessarily a loss in the ETF itself. DOCU, all right, DOCU. All right, DOCU, poor long-term potential, does have some additional risk associated with it, but the timing at 1.81, extremely strong uptrend, so more of a speculative play with a really strong momentum push currently. So overall, stock's going to be favorable. And last but not least, we'll do MTDR. MTDR has great long-term potential, but does have a little bit more risk associated with it. Timing, however, is the issue. 1.06, if you're already into it, you're definitely paying closer attention to it, maybe tightening up your stops, whatever it may be. 1.06, 1.07, I'd be a little cautious with it right now. Overall, the stock's favorable. Just be careful with that timing. Exactly, Mark. Exactly. Sherry said, I bought the paycheck program on yesterday. Does this come with the program? If you bought the paycheck, everything, yeah, you'll get everything that you need right there, Sherry. And anybody who signed up for the paycheck, just to give a little insight, I'm a big fan of the paycheck course. The trades that you learn in there are you know, pay for themselves very, very quickly. Actually, I took the paycheck course when it first came out to get familiar with the content in it. And I still use the trading plan and the tips from that course to this day. So, yeah, if you've signed up for it, you're in good hands. You're going to have a lot of fun in that course. Subhadra, you could definitely use technical analysis to time it. But I would make sure that if you're going to use technical analysis to time your entries and your exits on stocks, make sure it aligns itself with the overall market timing as well. That would be my only added point there, because, you know, yes, technical analysis is great, but when you combine it with the power of the market timing, that can really help supercharge your profits and make sure that you're getting in at the right time. You're going to have the overall tides in your favor. You're going to have wind to your sails, and that's going to help you really, you know, get the most bang for your buck on any of your trades there. All right, so if I did not get to analyzing your stock today, I do apologize. I've tried to analyze as many as I possibly could. If you're already a subscriber though, and I didn't get to analyze your stocks, all you have to do is just sign into the app. It comes with any desktop subscription or just by itself as a standalone in the mobile. And just click on the magnifying glass in the upper right, and you can do the same exact analysis that you've seen here today on your own, wherever you're at on the go. If you're not already a subscriber, click on the link in the description of today's video, and you can sign up for a 2-week free trial and get started right away. And, you know, as the old saying goes, seeing is believing. So as we wrap back to the homepage here, we see we're still 3 ticks into the yellow. The market is still neutral, and VectorVest still advocates caution when buying stocks at this time. If we scroll down a little bit, taking a look, the buy to sell ratio, RT, price, haven't moved too much. If anything, I think the buy to sell ratio has dropped a little bit since we went live. RT has stayed flat so far. MTI, I think, pulled back a little bit by a tenth of a point maybe. But, that doesn't really change too much. If we look at the advanced declines, that does change things. So we know that, we're close to that 2-to-1 ratio to the downside with the advanced declines earlier on. Well, that bias is getting stronger here, as we can see. Right now, we're only seeing 27% of stocks moving higher and now 62% of stocks moving lower. Clearly over that 2-to-1 bias that we want to see. So if you're, somebody who's playing the market to the downside, today is a good day to take advantage of that. So once again, thank you everybody for tuning in, both on Facebook and over on our YouTube channel. If you are excited about, or if you're interested in finding out more about the project Glenn and I have been working on secretly, make sure to follow us on our socials as well. Make sure to go over to our YouTube page. Make sure you're subscribed to that. Turn on the notifications, because hopefully within the next week or so, we should be able to give you guys some more details. But it's something we've been working on a lot. It's going to be a really fun time, something new. So we're really excited to be able to share more, but unfortunately, until things are set in stone, we gotta be tight-lipped about it. But just a little teaser there for you guys. So until next time, take care. Thank you all for tuning in here today. Have a great rest of your day. Have a great weekend. Be safe, and make sure to be here next Thursday at 11 a.m. Eastern as we kick off another stream for you guys. So until then, take care. Adios. Toodles.